Joining us now for a financial insider's perspective on the Investor Summit is a truly influential voice on Wall Street. Abby Cohen is with Goldman Sachs, and she's joining us now live. Abby, good morning to you, and thanks for being with us today.
Good morning. My pleasure.
Let's start off, first of all, with the things that may stand out to you as the most important points or chords that were struck during yesterday's summit.
The aspect that was really most encouraging to me was the attendance. We have had the pleasure of participating in each of the last 4 summits at the United Nations, and I will have to tell you that in 2003 we felt a little bit alone and isolated. The investors in the room represented about $600 billion, which sounds like a lot. However, the amount of money represented in the room yesterday in New York was closer to $8 trillion. And when you get to $8 trillion, that represents a critical mass. It represents a large enough amount of money to really have an impact on markets. One quick observation in terms of why that's important. Many people have known for a while that we should be focusing in on things like carbon footprint and environmental impact when doing investing. But quite frankly, the performance data didn't really help very much because we found that portfolios that were very much green in orientation were not able to generate good performance results. With $8 trillion now being geared in such a way that portfolio managers are being told that this itself is an important criterion, we are in fact seeing that in markets, stock market and bond market, that the securities of green-oriented companies are in fact in many instances generating very good performance results.
Now, Abby, when you mention what private capital should have been doing for the last number of years, are you prepared to say the financial community is now preparing for a low-carbon future?
I think it's very fair to say that there are many in the financial community who are doing so. Yesterday at the UN conference, the people from Ceres announced a new report in which they found a survey indicated that only about half of all portfolio managers are heeding the environmental call. But we are seeing in our own work that many of the largest portfolio managers, the largest pension funds, endowment funds, and money management firms around the world really are now very much focused on this area. So we think the momentum has already improved and may be gathering steam from this point.
Now, the summit delivered a policy statement asking Congress to pass climate change legislation. In your mind, Abby, what is the trickle-down effect to the investment community if the right, and I'll underline that, the right policies are reached here in Washington?
We believe that even without the right policy in Washington, we have seen some very good progress. So, for example, almost half of the states in the U.S. have gone forward with their own policies as it relates to greenhouse gases and other environmental impact. We also know that many corporations in the United States and elsewhere are already conducting themselves as if there are tightened standards on greenhouse gas emissions. So let's keep in mind that not everybody is waiting for the Senate to make its decision about whether to incorporate policy similar to that that the House passed last summer. So that's point one. Point two, the reason a price on carbon is so important is that investors and the markets can work best when information is good. So, for example, decisions have to be made about cost and potential revenue and obviously the return on investments which are made. And if a cost such as the ultimate liability involved with carbon is not yet properly reflected, our concern is that sometimes the right decisions are not made.
Is there a different approach, Abby, when we're talking about clean tech investments, for example, renewable energies? There's a different paradigm for the profitability involved with these companies, correct?
Well, I'm not quite sure what you mean by a different paradigm, because at the end of the day, when investors have capital to invest, what they're looking for is to optimize returns. Note, I didn't say maximize returns, I said optimize returns. And in many states of the United States, there are fiduciary responsibilities that are put on the trustees of pension plans and others, where their only legal priority is to serve the interests of the beneficiaries of those pension programs. And in many cases, that has been interpreted to mean to have the best possible return. So the fact that the return might be coming from, as you put it, a green tech investment, in some ways under the law is not really relevant. What I think was quite important, though, and you certainly heard Ann Stossball talk about this, is that investors with long-term horizons are willing to worry less about quarterly earnings patterns and much more about these intermediate and long-term, not just returns, but also liabilities, which might be associated with not behaving in the most environmentally friendly way.
I think that is certainly a sufficient answer. Abby Cohen with Goldman Sachs, a speaker at yesterday's summit there in New York. Thank you again for taking time to talk with us today.
Thank you.
As we said, a very influential voice on financial matters in and around Wall Street.